Well, very good afternoon to all our viewers out there. This is the newsroom and you're watching ET Now. Well, the markets may have paused a bit if you take yesterday's downward tick and today's flattish kind of a market, but there are no complaints really. We have galloped over 10% this series, one of the best series led by large caps. Flows have been very buoyant and everybody on the street is discussing what does this mean. The biggest monthly FII flows we've seen in almost 2 decades. Is it a positive or this is hot money, temporary tourist dollars as they say? How should this be analyzed? So we thought of getting you someone who's got skin in the game, an FII based out of Singapore, Manulife's Rana Gupta, but of course of Indian origin, so understands the Indian markets very well. Rana, good afternoon and thank you so much for joining us on the show today. How should an investor read the big concentration of inflows from the FII fraternity this month? And what part of it would you really say could be temporary and not long-term money in nature, in your thoughts?
See, on to the second part, I know the month is still ongoing, all the data are not in, it's pretty hard to decipher. But the number, since the number is like, 8 billion or higher, even if you were to assume part of it is hot money, I think the amount of stable money flowing into Indian markets and indeed to other emerging markets is quite substantial. And I think the November has to be seen in the context of few of the uncertainties that are behind and few of the good news that is on the way, because the US election is now behind us. And also there are tentative good news on the vaccine part. This put together and the hope of a fiscal stimulus, maybe not as high as earlier expected, but nonetheless, maybe hope of a 1 trillion plus stimulus in US, plus the hope of vaccine, revitalizing the economy. All those things are driving optimism. And obviously in the emerging markets, the fiscal situation is a lot better. And also, if you think about not just India, if you think about an emerging market complex, whether it's India, China, Indonesia, the current accounts are everywhere better. So fundamentally, the currency, the economy looking stronger. So therefore, the flows are coming into emerging markets. Also, one has to understand that the rates in developed world are very low. So those are the things, low rates, a revival in the economy because of, the hope of vaccine and the fiscal stimulus and the structural improvement in emerging markets. They're all driving these inflows. Part of these inflows may be money, but having said that, I think the part of the inflows that is structural, longer term, they want to play is also quite substantial.
There is a sense emerging here in India that, if earnings momentum really sustains and FII flows remain the way they are comparing it to previous cycles like 2008 onward or even earlier, then we are set for a structural 2-3 year kind of a bullish phase. If the earnings upgrades by some of the key brokerages which are pouring in are to be believed, high double digit is somewhere they are saying about next 2-3 years. Goldman, Morgan, Nomura, all of them. What kind of likelihood would you assign or probability would you assign for that hypothesis to play out?
So to answer this question, even look at this quarter's earnings, right? After a long time, the earning growth was in proper double digits, like 20% plus, and we saw some earning upgrades. So going forward, we do think the earnings growth are going to be very important because we have seen a lot of PE expansion at the market level. Having said that, I think 1 or 2 things we have to be careful about. If someone is taking a 12-month view, this economic growth coming back, the reason why we're bullish on, will also lead to some of the rise in bond yields, which means the cost of capital with a 1-year view, some of the bond yields, might just go up from these extremely low levels. That may mean some of the very high PE stocks, there we may see some PE coming off. So therefore, their earning growth can be offset by some bit of PE coming off. So therefore, those stocks may consolidate or they may just move up somewhat. But I think because we are betting on economic recovery, the economically sensitive, the cyclical sectors, which let's say in Indian context will be something like automobiles, the banks, or even the building materials. All those sectors should see pretty strong earning recovery, and multiples for those sectors are not necessarily expensive. So it is in this sector, I think, one could be more confident of both earning recovery as well as the P multiples at least staying the same, or maybe in some cases even expanding.
Rana, while the bullish argument is very well discounted and discussed in the market about earnings recovery, economic recovery faster than what people estimated, flows very buoyant. One part of the market which many are not taking stock of is the rising valuations. In the medium term, India has become one of the most expensive markets versus emerging markets, other emerging markets, and its own historic valuation as well. How big is that an issue in your view as an FII, and how would you really analyze that particular point?
Right. So we were kind of touched on this point that there are parts of the market where the valuation is actually quite high, and those are the sectors that also did quite well, in 2020 because of maybe the defensive characteristics. So therefore, I think there is a possibility those sectors which is already trading at, let's say, much higher than average valuation, those sectors may see some valuation correction in spite of the earning growth. On the other hand, the sectors that are trading at a discount to their long-term average, and these are particularly economically sensitive sectors, they may see not only earning growth, but some of the valuation also expanding in terms of reversing to mean or maybe even slightly higher. So, when you're right, the market valuation is now on the higher side, but within the market, there are sectors like staples, which are trading at a pretty high valuation, or even some of the consumer discretionary retail stocks, in spite of earning recovery. We think earning will recover, but the valuations are quite high to begin with. On the other hand, you have some of the auto stocks, some of the banking stocks, some of the home building material stocks. They're trading at a much cheaper valuation. So I think that with a 12-month perspective, it will make more sense to focus on the cyclical part of the economy.
Right. Rana, how are you seeing other emerging markets or investing opportunities outside of India? Also, there is a lot of eagerness now among big HNI investors in India to also have a slice of their overall portfolio outside India as a part of diversification. What are your thoughts on that?
So I think diversification will also depend on the investment objectives that the investors would have. In our view, first let's look at the investment objective, and then let's talk about a few themes, if that's fine. So I think in terms of investment objectives, Indian market gives a lot of growth opportunities. But some of the investors who are looking at income, they could consider something like something like a REIT kind of structure. But I understand that in Indian markets, the number of REIT sectors is quite small and very few. But globally, REIT is a very big sector, and with the economy opening up, the REITs are also now looking to look quite good. So I think that is something one can look at for the maybe in a portfolio income part of the portfolio. And also within Asia, we are seeing certain trends. Also, we are seeing those trends in India as well. These are trends like the new consumer, where the new consumer, the internet, transaction on the internet is taking a very dominant role. In India, many of those companies are in the private space, right? And then secondly, we are seeing a big push, both regulation-wise, investment world-wise, a big push towards the sensitivity towards climate change and carbon emission control, so on and so forth. Whilst this opportunity exists in India as well, but all the equipment that you require to do so are basically companies listed elsewhere. And there were some in the emerging markets, some in even the Europe and US. So this is one segment I think is also gaining a lot of traction. So I would say something like a new consumer and the clean and green. Those themes are very prevalent in emerging markets now.
Right. In fact, Rana, a lot of Indian companies are seen as green, clean companies under the ESG theme and are getting phenomenal market cap now here in India as well. I'm sure that theme is playing out in rest of Asia as well. Do you see that? The ESG, clean, green kind of company opportunity, the global money looking for such names?
Absolutely. I think the carbon emission theme is going to be could be a big theme, and from our perspective, when you talk about, let's take the example, when you talk about a clean and green company, a company like IT company is starting clean and green. So that can, see some excitement from our ESG perspective, as you put it, right? So that is one way to look at it. But the other way to look at it, think about, let's say, materials companies like, let's say, a cement company. And today they're burning a lot of coal. But let's just say from coal, they go to more waste heat recovery. Maybe they kind of use their specific water usage. Those things are important in the sense of delta. So they become much more sustainable. They become much more less polluting, less emitting kind of companies. And those are the companies that we think that the opportunity lies the most, because the incremental opportunity in terms of those companies becoming more sustainable, responsible, carbon emission control and all that becomes much more relevant in those companies. So I think global money as well as us, we are looking for those kind of opportunities.
Rana, very quickly, last word on mid-cap end of the market, or maybe some of the sections of the market which have got excited because of government policy measures, PLI schemes, etc. coming in, or because of structural opportunity from China plus one emerging.
Yes.
Any theme which you like there?
Oh, yes, of course. I mean, perhaps we have touched upon this in the past, but nonetheless, it makes sense to reiterate that theme. And this theme cuts across the market cap, but there are many opportunities in the mid cap. The two themes that we really like in India for the structural theme is digitization. And when I say digitization, it need not be only internet companies. Many companies, like I said, it can be automobile company, it can be a lender, it can be a non-banking company, it can be a hospital, which is embracing digital to attend to the customer, thus improving productivity. And we see many examples of that. We are really, really encouraged by what the Indian companies are doing in the digital space. And second one, where the government initiative has of late supported a lot, is the manufacturing. So I think all the policy support we have seen is to support more manufacturing, like, for example, tax cuts, PLIs, maybe somewhat higher import duties, so on and so forth. So this is promoting a lot of manufacturing, and because of China Plus One, as you alluded to, in the areas like consumer durable, white goods, and going forward, maybe in auto ancillary, and even APIs. So a lot of opportunities in the mid-cap space exists because of those favorable policies. And this, fortunately enough, is also kind of blending with the global theme, because I think digitization is something where a lot of global capital also willing to flow through, realizing the opportunity, and manufacturing also, given the China Plus One, and now the global companies are looking to diversify their base out of China, is also creating a good global opportunity. So for digitization as well as manufacturing, we think the domestic initiative has come at the right time, when the global environment is also very supportive of those themes. And there are actually quite a bit of opportunities in these two themes in the Indian mid-cap space.
All right, Rana, we'll let you go on that one. Thanks so much for joining us. Always enjoyed chatting with you. That was Rana Gupta of Manulife Global joining us from Singapore. Time for a very short break. On the other side of the break, we'll get you exclusive story on the mega PSU reboot drive of the government. My colleague Karishma will join us from New Delhi for more details on that story. So don't go anywhere.